has a non-traditional lender told you as a self-employed person, no, you can't qualify for a mortgage? So the way that I can look at this is I can take a look at what your cash flow is. And we use a bank statement loan. And what I tend to do is I tend to do 12 months. You can do 12 to 24. I tend to use 12 months worth of bank statements. And I take and look at your deposits for the last 12 months. And I start my calculation based on how much you've deposited over the last 12 months. And based on that, the bank applies a ratio. And it depends on how many people you have working for you. And if you're a sole proprietor and it's just you and you work from home, they're going to give you a little bit more of the money. But the worst possible case they're going to do is they're going to cut that in half. In this particular situation, and I don't remember her income, so I'm just going to tell you, I remember what she qualified for. So with her tax returns, she qualified for $950,000, which in in a lot of the country, that's a huge number. But in San Francisco, it was not enough to get her to where she wanted to be in purchasing power. But if I took a look at her bank statements and I added up all her deposits for the last year and applied my discount or the expense ratio is what they call it to that, she was actually able to qualify for a $1.7 million purchase. All right. So what are we looking for? 1.7. So we're looking at, she qualifies for $750,000 more by going with a bank statement loan than she could with a traditional lender. So we have portfolio products that allow you to qualify based on your bank statements.